Hello guys, welcome back to Forex House. Today I'm going to share this awesome strategy with you. Without wasting time, let us go to the settings so that you can have this beautiful money downloading screen just like me. As usual, start by clicking the F button to go to the settings. The strategy consists of only 3 moving averages. As you are aware, there are a number of trading strategies that are built around the use of moving averages. In this video, we'll teach you how to use the moving averages to determine the trend, how to incorporate the crossover of moving averages into your trading system, how moving averages can be used as dynamic support and resistance. You can start adding these indicators by clicking the F+ button on the left side of the word main chart. The first moving average has the following parameters: period 14, shift 0, method exponential, apply to close, style 3 pixel, and the color it is green. No levels are needed in this strategy. The second moving average has the following parameters: period 50, shift 0, method exponential, apply to close, style 3 pixel, and the color it is red, or any color of your choice. The last moving average of today should have the following parameters: period 100, shift 0, method exponential, apply to close, style 3 pixel, and the color should be blue. And again, no levels are needed on this strategy. Now if you have applied the settings as I said, then you should have a screen on your phone just like me. If you're new to this channel and you're tired of losing money on forex trading, please do not forget to subscribe to this channel. In order to be able to use this strategy effectively, there are rules that must be followed. Make sure you do not miss any of the rules. Now enough with the blah blahs. How should you use this strategy to determine the trend? If the 14 or 50 EMA is above the 100 EMA, then the direction of the market is bullish. When the 14 EMA or the 50 EMA is below the 100 EMA, the market is bearish. So you should get ready for sales position. I repeat, you should get ready, but that does not mean you should just take the trade yet. Later in this video, I'll tell you why is that so. As you can observe on the screen right now, it is pound versus US dollar. The both 14 and 50 EMA were above the 100 EMA, signifying that the market is in bullish. And even when you decide to prove with trend lines, it will just be proven correct. The second example on the screen is pound versus Japanese yen. As it is seen, just after the end of correction phase, both 14 and 50 EMA went above the 100 EMA, signifying that it is the start of bullish trend. Again, even when you decided to prove with trend lines, it will be proven correct. I hope you know the 1, 2, 3 market moves. If not, you can share with the community by leaving a comment below. Second rule is you should know how to use the moving average crossover to enter the trades. This means that after knowing the trend of a particular pair, the next question that should come in your head is when is the perfect time to enter the trade? And that's where the crossovers become useful. By looking at what is happening with pound versus US dollar, as soon as the crossover occurred, the market changed direction after the correction to start moving upward direction. Just imagine all of these pips that went all the way after the crossover. It is cool, right? But knowing the crossover and trend techniques can become ineffective when the economic news occurs. To avoid from having unexpected fakeouts, I recommend checking this website known as Forex Factory. This website tells you when the news is expected to occur by giving the exact time and how strong is that news. For example, take a look at the news occurring on 1st of June 2021. The Forex Factory lists all the news that are expected to occur on that particular day. On a particular news, it even offers free forecast on what is expected to come as a result of that news. As you can observe on the screen, you can see all the forecasts, right? Furthermore, Forex Factory even tells you how strong the news is expected to be by having different colors on each news, whereas the news with the red color signifies that that particular news, it is very strong economically. I'm not a news trader. I do not trade news, but it's no secret that news have big impact in your trading strategy. If you ignore the news, then you will receive a lot of fakeouts using these indicators. I must confess, I'm also a victim of this economic news way back when I was a beginner. An advice to you, you must be very careful with this news. I hope that you're enjoying the video. If yes, then please do not forget to subscribe to the channel Forex Clubhouse. Now let us talk about the last and most important part of this strategy that talks about how to use the exponential moving averages as dynamic support and resistance. There are many Forex traders out there who look at these moving averages as key support or resistance. These traders will buy when the price dips and test the moving average, or sell if the price rises and touches the moving average. I just hope that you know what is meant by the word support or resistance. You can let me know in the comment section what do they mean. Here is a look at the 4-hour chart of pound versus Japanese yen and pop on the 100 EMA. This blue moving average, of course, it is the 100 EMA, and we'll be using these moving averages to serve as our dynamic support or resistance. Now let us see if it serves as dynamic support or resistance. As you can see, the market currently was on a bullish trend, and it looks it really held it well. Every time as the price approached the 100 EMA and tested it, it acted as support and price bounced back up. It's amazing, I know. One thing that you should keep in mind is that this is just like your normal support and resistance. This means that price won't always bounces perfectly from the moving average. Sometimes it will go past it a little bit before heading back in the direction of the trend. There are also times when the price will blast off altogether. What some traders do is that they pop on two moving average and only buy or sell once the price is in the middle of the space between the two moving averages, and they call these areas as zones. And the area between moving averages could therefore be looked upon as zone of support or resistance. One thing you should note and put it in your memory is that you should know that they can break just like any support or resistance level. Please note that the information contained here is for informational purposes only. Nothing in this video shall or will be considered as legal or tax advice. The content contained in this video is just my opinion. Trading Forex can be risky and may not be suitable for everyone. The speaker does not guarantee any particular outcome. I hope that you enjoyed the video. Please do subscribe to this channel for more awesome videos to come. Thank you for watching. God bless you, and bye bye.